Hello and welcome to another edition of Client for Life. As you see, I'm shooting your Christmas message from Yearing Station. So sorry to those of you who couldn't make it today. It's so difficult with work commitments and holidays and Christmas shopping, but we've got about 70 people to a sit-down lunch today, so I'm really looking forward to it. And for those of you that can't make it, we'll make it up to you throughout the year. So, our Christmas message, what we've all been waiting for those of you who have a chance, go and grab the Financial Review. Page 30 has got a fantastic summary of the market. Okay, there's always good news and bad news. Let's start with the bad news. For those of you in the share market, not a great day. The overall performance was that the share market across Australia actually closed at -3% in growth. Now the yield and the return was about 3%, so it brought you up to zero. The great news is for those of us who are in property, we had 8.5% growth across Australia. The good news to that is, of course, as you all know, we add our rental returns to that, which came in at 3.5%. Now at Solid, we run on average about 25% cost, so you would take roughly 1% off your 3.5, take you down to 2.5% in rental growth. You add your 2.5 to your 8.5, you get 11% growth. And here's the great news, I won the competition. As you know, we all had a competition within the industry of what growth would come in it, and I came in at 11%, so I predicted really well. Where I bombed out, I did actually think that we would increase interest rates, and I predicted August, September. As you know, it didn't happen. And I'm going to ask Nick to join me for another interview in a minute, but pretty much, as you know, interest rates can be fickle. They're a combination of unemployment, growth. Obviously the Australian dollar has a little bit to do with it. So when you have higher unemployment, you have lower interest rates. Why is that? To stimulate growth in the economy. But of course, not only have we had lower interest rates because of this, but we've had a changing Australian dollar, which, as we all know, peaked well over $1, and it's hovering around 84 cents at the moment, in the low to mid 80s, up and down. So, but pretty much what I think we can expect from next year's market, I think we are still in a recovery of the GFC. I think on the domestic market, we will still see growth. You know, we've had clients buy property for 1.3 million at the start of the year, but I firmly believe they'll get 1.5 if they sold today. I know I bought myself a little townhouse for, you know, in the early 700s. I know I'd get 850, 900 for it today. So the market is, as you can see on that retail domestic front, still strong. I know a lot of people would see that growth slowed. I'm not convinced it will slow, despite the tough times. We've got a lot of money coming in. There are as many hard luck stories, there are amazingly successful entrepreneurial stories in Australia at the moment. So I really think the investor market, I think it'll be nicely paced. It does skate off the shirt tails of the retail domestic market somewhat, but of course we all focus on return of investment, and what we need to do in that is keep our costs down, our body corporates down. Even townhouses have body corporates, so we just have to look at the overall big picture and constantly focus on, it's not just what we pay for the property, it's what rental returns we're going to get and what we're going to have in costs overall. So the absolute surprise in the market was the bond market. Now there's a running yield that's happening at the moment in Australia, about 4%. You know, pretty much bonds, those of you who've read my book might remember my nana was really into bonds. She would check the daily bond rate and loved gas and fuel bonds in particular. But the bond market rate closed today, according to the Financial Review, at a growth of 10%. What does that tell us? You know, I guess good old conservative investing is alive and well. So anyway, I'll finish off by saying that we have had a record business at Solid, and I want to thank every single client for their contribution. There's not a client that we have that we wouldn't have home for dinner, and that's the thing that all my staff constantly say. You know, we love working with every single one of you, and you know, sometimes we have the odd hiccup, but it all seems to work out well. So we've had a record growth in investing. We've had a fabulous growth in our financial planning. We've taken on 20 new clients, and they've all had really good successes, and of course we've launched our property management division this year as well, and that's headed up by Sarah Jane and Alina. So I'll sign off by saying a very, very Merry Christmas. Please have safe holidays, a very, very happy New Year, and we're back on deck on the 5th of January, and you'll hear our seminars will actually start, I think, around about the 29th of December, so there's no break from us. You'll be hearing us, our dulcet tones over the radio. And just in closing, one final thing, we worked out today that 1 in 4 of our sales this year has been from referrals from people like you, and it's always hard to know how to thank a client for a referral, so we've come up with an idea that referrals for the year of 2015, we're going to offer 1 year free property management to manage your property free of charge as a thank you for a referral. It's so hard to know how to thank you, and I think that's a really good way, because if you're renting a property for $450 a week, it's around about $1,600 a year of free property management. So please keep those referrals coming. Have a merry and safe Christmas. Signing off now from Yearing Station. I think I've got a Chardonnay waiting for me. Thank you very much.